Hello, traders. Gary Wagner here. 12:39 in Honolulu, and it is 5:39 in New York on Monday, last day of January 2022, and this is the daily report for gold and silver. We had a nice showing in the precious metals, almost across the board, with the exception of palladium, which has been on such a tear today. That did lose $32 in trading. However, gold, silver, and platinum all closed at higher pricing. In the case of gold, it gained 0.62%. That's an important number, and you'll see why in a second. And after factoring in a gain of $11.10, the most active April 2022 contract is currently fixed at $1,797.70. Silver gained approximately 17 cents, or 0.75%, with the most active March contract currently fixed at $22.47. And the reason I said that a 0.62% gain is so very important is simply by looking at the US dollar index. That closed down by 0.63%. So almost all of the gains today are directly attributable in gold to dollar weakness, with silver having a very fractional percent due to buying. We are looking at a daily candlestick chart of gold. I've included a Fibonacci retracement data set, as well as the 50 and 200-day moving averages. On Friday, I spoke about the fact that we were a mere 20 cents apart between the 50-day and 200-day moving averages. As you can see, they have definitely moved farther apart rather than completing the death cross, with the 50-day now at 1802.90 and the 200-day at 1796.10. What is more important, as we have seen a series of lower highs and higher lows, we've identified a classic corrective pattern in the triangle group from R.N. Elliott, which I have just put up on the screen, and also overlaid figure 31 from the book Masterworks, where I took this concept from. As I'm about to show you, it does appear that it has completed and concluded the fourth wave and has now possibly entered the fifth wave, as long as gold continues to move higher and does not backtrack, specifically violating this lower support line, which was created from a series of higher lows. It would remain valid, and I anticipate we would get something like a 3 count or a subwave of an A, a B, and then our final C. If gold does follow this type of triangle model in terms of a corrective pattern, the key distinction will be within the C wave, because the C wave has been the terminating wave once it hit either support or resistance on waves 1, 2, 3, as well as 4. In this case, we would expect it to actually break above resistance, which R.N. Elliott labels as a thrust, and move to much higher ground. So based on the identification of this type of corrective wave, if in fact we see follow-through buying and higher pricing, we definitely want to take advantage of it and to enter the market from the long side. Throughout this week, we will talk about the potential, if it in fact is unfolding in this way, of where this A wave could terminate, how deeply the B wave could go, and most importantly, where gold could end up at the conclusion of this C wave. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.